Hi, my name is Kevin Retscher, owner of First Meridian Mortgage, and today I want to discuss 3 of the most common lies told to you by your loan officer. Number 1 lie. I'm going to offer you a free float down in conjunction with your loan. So they'll say this so that you'll feel like you're going to get a better deal potentially if you do business with that particular loan officer versus another loan officer. Okay? So if the loan officer offers you that free float down, let me give you an example of why he might be lying to you. Okay? I'm going to read the renegotiation float down policy with a few lenders. This particular lender says we do not have a specific float down policy, but it's a case-by-case basis. And if the market is better by 0.25%, they may consider renegotiating the deal. That's first lender. Second lender, renegotiations are considered if the interest rate is moved by more than 0.25% and the closing date is within 15 days and you have to use the 30-day price plus 5/8, and the rate has to improve by at least 1/8 to be eligible. This lender, if the broker wants to do a float down, price must be better than 100 basis points. The broker would lose himself in his price 50 basis points. The rate must improve by 1/8, and the market had to be better by 1/4 to be eligible. Loan has to be in closing, approved, and must close within 15 days to be eligible. So I just read off 3 examples of which are all different. And the key point in this, even on the third one, the loan officer himself would lose 0.5 point if he was to initiate it. And he might do that to make some money on your deal versus no money, but he does have to give up some of his money in conjunction with that. Here's the key point. If they're offering you a free float down, ask, how can I verify whether or not I'm eligible on a day-to-day basis? And the answer is going to be, you can't. You have to go and call, typically, the loan officer and ask him, and then he's going to, check. And he's going to come back and probably say the market hasn't moved enough. There is no way you're going to be able to verify that I'm aware of with any specific lender if the float down is real, eligible, if you've met the criteria or not. You're at the beck and call of what the loan officer says at that point in time. Most loan officers are probably going to lie to you. So when a client asks me if there's a free float down or if we offer a free float down, I basically tell them there is not a float down, but I do not have a problem asking if the market's moved more than 0.25%, if they'll renegotiate. Sometimes I get something, sometimes I don't, but I don't promise that there's a float down. Even if a lender has that float down policy, I'm not going to jump out on that ledge and make someone think they're going to get a better deal. I have no problem asking. I tell my kids, you can ask for anything in the world from me. Just accept the answer. And that's the same way that I've conducted my business when it comes to a float down. The number two biggest lie told by loan officers: by doing the refinance, you're going to skip 2 mortgage payments. It's one of my biggest pet peeves when someone mentions it, when I see mail that goes to a client's house and says skip 2 payments. You never skip 2 payments if you have a mortgage and you're doing a refinance. You're going to pay the old lender in arrears what's due them, and you're going to pay the new lender in advance at closing of that next payment. So you're not skipping the payments, it's being rolled into your loan via rolling it into the payoff on the old lender and rolling and doing a higher loan amount with the new lender to cover both of those mortgage payments, and in theory potentially your closing cost and escrows also. So beware of any loan officer that, one, touts, hey, you get to skip 2 payments, and 2, says, oh, there'll be no out-of-pocket at closing. If he says there's no out-of-pocket at closing, you are effectively rolling in a lot of your costs, okay? The only scenario where that would be different is if your principal balance has not changed and you've gotten a credit from the lender to cover all of those. But you need to beware. Number 3 biggest trick and or lie that's done by loan officers. If you call up a loan officer and say, I want a no-cost refinance and I don't want to bring any money to the closing table, he's only going to hear the last part, okay? And this is where the buyer beware comes into play, okay? He may give you an estimate that says 0 due at closing, but you have to look at the numbers and work backwards to make sure you're getting the deal that you originally asked for. You asked for a no-cost refinance and you wanted to bring nothing to the closing table. So in conjunction with that, if we were looking at a deal here, the first thing that you want to look at is box J. Box J is where there's any lender credits. On this particular case, there's a $5,200 credit. Your actual closing cost on this deal are adding box D and box E together. Those add up to be about $5,000. So the credit exceeds that. This would be a no-cost refinance. Now, what about F and G? F and G, if you say that you want to bring no money to the table, I then have to roll this $4,200 into your new loan. Okay? What you want to make sure that does not happen, if you do not see that credit in there for the $5,200 and he's rolling in this $9,200 here, then he's not doing what you asked. Okay? So buyer beware, know what your credit is, know what is being rolled into your loan, and be careful of saying, I don't want to bring any money to the closing table. On a true no-cost refinance, I like to tell my clients you'll bring 1 month's mortgage payment to the closing table to kind of pay F and G, which is basically your escrows. And then I like to have the lender credit be as close or as much as I can of the closing cost, preferably a true no cost to cover all of them, but I'm okay on hybrids. But the key point is to do the math. D plus E minus J. That'll tell you whether or not you're getting a no cost. Understand, be careful saying I don't want anything at closing or nothing out of pocket, because the loan officer may just give you what you're asking for, and if you don't do the math, you may get all of it rolled into your loan, and that loan officer just made a lot more money on your deal. So in closing, I just went through 3 of the most typical lies and or deceiving acts that a loan officer may try to earn your business. Hey, do business with me, I'll give you a free float down. Two, oh, you're going to get to skip 2 mortgage payments in conjunction with doing a refinance. 3, I'm going to do it at no closing cost. You'll have no out-of-pocket at closing. What I want to say is if you call First Meridian Mortgage, you will not have to worry about any of those particular items. You won't have to worry about being lied to in any single one of those scenarios. If you want to skip 2 payments, I'm going to tell you you're going to be rolling them into your loan, and you're going to be having a higher principal balance. If you want to float down, I'm going to tell you I can ask, but there's no guarantee, and it doesn't float down to market. 3, I'm going to let you know if in fact there are any closing costs and what exactly you're paying. So if you want honesty and integrity by a Marine who's been in business for over 27 years, my name is Kevin Retscher. I own First Meridian Mortgage. There is no better place to get a mortgage in the DMV than First Meridian Mortgage. 703-799-5626. To all the Marines out there, Semper Fi. I'll talk to you soon.